Hello everyone and welcome to another weekly video for the Divergence University. My name is Jordan guys and today I'm going to walk you through some of the interesting examples that we found during the previous week. The website where you can find this table is divergenceuniversity.com, and under the performance tab right here you'll be able to see this table. So as we can see, the previous week started from the 22nd, which means from here to the top we have three possible trades. I'm going to start with pound Aussie on the top because this is the one I like the most. Let me just fire up the pen very quickly. Okay, change the cover, and here we have it. So the first thing I would like you to pay attention to right here is this level. I mean, look at it. This is an amazing zone, and for some reason the price is respecting it. So what's happening? We're trading inside whatever this pattern is, and then we start pushing to the upside, rejecting this low right here. Pullbacks attempt to go ahead and break this zone, this level. Pullback never managed to create new low, new highs being formed, and this is where the price is providing us with a pullback right into this level right here. Okay, this entire zone is what we're focused on. Previous low as a more conservative protection could be used, but here we don't see absolutely anything against, meaning there is no divergence against on this part, there is no divergence against on this part. What we do have, however, is bullish hidden divergence. Now, excuse me, that could be tricky for one reason, and I want you to pay attention to these things, but look what do we have inside this last wave. We have an impulse, and you will be able to see that on the 15-minute chart, let's say. What does that mean? That means we might be looking at deeper pullback, creating a deeper ABC, and only then continuing higher, which means the price might be pushing to this zone or maybe even lower. Okay, so assuming that, let's say you're attacking this after the first wave, if price goes and hits the stop loss being aggressive protection here, I would definitely be looking for second attack, because then I have the reading and it fits perfectly with this kind of scenario. So second attack in this kind of context, in my opinion, makes sense. This one pushed higher, target collected, and as usual, make sure to have your targets as close as possible. Actually, in this case, should be below the previous low, right? And when you're attacking for the sales, if this is your swing low, you want your target to be at least slightly above that. Why? Because usually when we reach such levels and there is potential divergences against them, which is most of the cases, you see the price reacting. And when the price reacts from there, you don't know whether the price is going to reverse or the price is going to give a pullback and continuation. So mind the swings when you're doing the pullback trading. Bitcoin. Now, this example I honestly don't understand and don't find attractive for multiple reasons. In order to understand better, I have prepared this chart for you, and basically this is the case right here. So look what's happening. We have this divergence right here. This is histogram divergence on a single slope. It's not even histogram divergence between two slopes or anything like that. A 1 hour chart, okay? So let's start from the 4 hour chart, and I'll tell you why I don't like this specific example. So first of all, this is the zone, this is the level right here, okay? And when we go ahead and mark it, we can see that the price is actually bouncing. So in terms of levels, love it, okay? It's spot on, the level is there. But when we start looking at this thing in closer view, what do we see? We see a potential ABC right here. And this ABC, if we take a look at the histogram, the lowest point of the histogram, it starts to push lower. You see, this is momentum. Everything else that we're going to be looking at in terms of divergences is pushing lower, okay? The only thing we might be looking as potential divergence again is this one right here, which is again a histogram. So at that moment, we have a level, right? We have the support, we have one divergence on the 1 hour chart, which is something where I would not put my money. Then we have the 4-hour chart. So 1 hour chart, 4-hour chart level. We have three, one of which is a bit shady, conditions to suggest a bullish continuation, right? Or at least bullish pullback. On the other hand, if we take a look at the bigger waves, the price is just closing below the 61.8. Yeah, we do form spikes and so on. I'm not really sure where the entry is. I think it's when we look at it on the 4-hour chart is this one. But the price is holding below here. And this is significant. EMAs are pushing lower. RSI is not providing any specific confirmation that we're going up. So again, we only have histograms. And for me, histogram is just a pullback divergence, right? We cannot expect too much out of histogram. Then on the 1-hour chart, excuse me, again, look at this, pushing lower, pushing lower. Everything is pushing lower, okay? And that's the only divergence we see here, right here. So at best, you have 50-50 on this setup. Now, again, this I'm not saying this is the correct way, the only way, etc., etc. But if my analysis is suggesting 50-50 for a given move, this is definitely not tradable for me. Okay, so that's pretty much the idea that I would be suggesting for this one. Furthermore, if this is the final pullback, so if the first wave, second wave, and the starts dropping here, right? The price starts dropping here, and we start counting waves, what would be the logical count for this thing? If it's like this, you don't have divergence. Doesn't make much sense. Plus, let's see if we have too many numbers. Let's use that. Okay, 100 broken, so this is not the shortest. And this is definitely longer, right? We don't need to drop it there, but it's longer. So basically, the rules would be complied here, complying, but there is no divergence, which means this is likely going to give pullbacks and continuation. Now, question is, do you want to be involved in a situation where you're limited to a pullback alone or not? Okay. So yeah, in short term, again, by all these arguments, we can see the potential pullback, but you need to make sure you understand the difference between trading at the end of a cycle and trading the pullback, and then you might be expecting further continuation in that given direction. Okay, that's the difference, the pullback trade or the end of the cycle trade. So this is short-term play, a bit more aggressive, and actually we should have done it in the opposite direction, so it makes more sense. Okay, so buying here, you're attempting to catch this, the pullback, right? Short term. And then expectations to continue lower. Once this thing is completed, then you can expect the price to reverse and continue and ride the big wave. So if you're into the short term, into day trading, you might be doing that. If you're waiting for swings to be ridden, right, big waves, you need to wait for the bigger structures to fit. You need to wait for the divergences to fit and levels, of course, and only then start the attacks. So that's about Bitcoin. And then we have EuroCAD. Well, for EuroCAD, things are a bit simpler, in my opinion. You have the first wave, you have the pullback of that first wave. So you have this, and then you have the second wave. Too many lines, but basically that's what I'm trying to show. Okay, a larger ABC, which in terms is formed by this, that, and that. Okay, so here you have a pretty decent level. Right? This is the previous breakout zone approximately, and we're coming for a retest here. ABC structure is being completed, and now since this is a pullback structure, I would be using only histogram if available, right? It's still okay, but we can see no divergence on the MA. So that means after this push down, pullback or not, we might see another wave up. We might not. Again, this is a pullback structure which we are attacking for continuation and using it to join the main trend. Okay, so the difference between Bitcoin and this one is huge here. I hope you understand it. So that's one of the divergences, and then you have another divergence here, but this is more of a 15-minute chart divergence. So that's the reasoning behind your cut. All right, so that would be all. If you have any questions, leave a comment and we'll get back to you. Thank you.